Good evening, everyone. It is Sunday evening, the 15th of March 2020, and I'm just preparing my analysis of the global indices for the week commencing Monday, the 16th of March 2020. So starting off here with the Dow. Now, the most important chart really for me is having a look at the monthly. Just to get a sense of this, of course, is to get a sense of perspective. Although it was incredibly dramatic, we had two really big historical drops this week, and they are historic to my understanding, to my recollection. They are the biggest weekly drops in history, and very much could be sort of thanks to Donald Trump, and it really just his mismanagement and highlighting the incompetence of the administration. Having said that, there was also definitely panic, and panic is something the markets tend to do really well. So just highlighting this, we're now just coming into historical levels of support, and really what I'm looking for, and I'll go to the NASDAQ because the NASDAQ being the most bullish of the bunch is really what I'm going to use as a reference. But what I'm looking for this coming week, again, I said it last week and the week before, looking for these weekly charts to attempt to recover from the levels. There will be buy orders at these. Individuals and companies with lots of cash will have lots of buy orders sitting at these levels of support. So there'll be lots of buys on that because, of course, they're getting everything at a discount. So that being said, and you can see the very big recoveries, very big candlesticks here on the daily. I'll be looking to see if this week we can manage to recover from that. Now, if I just carry on, so look at the S&P, and then I'll carry on when I get to the NASDAQ. Again, we've had a really nice correction down here. It has been long overdue. And I also think, let's just have a look at it on a quarterly basis. So let's go and get a bigger perspective on that. We can see we've come back into the moving averages. This is a really good area for it to find value again. And again, I'll have a look at it on a yearly basis. So go and have a look at it on a yearly basis. It could potentially, if this is going to be something that carries on for a while, we could come down below 2,500 and head a little bit lower towards 2,100 in towards 2,000. Okay, so for me that's a very extreme situation, and again, I also don't experience has kind of taught me not to expect this to recover this quickly. Everybody might, or there might be a lot of people that think this is going to recover in a couple of days, that if something can placate the markets, and then, they'll be okay, they'll start to recover. It doesn't really work that way in my experience. Usually this is something that I think is going to be ongoing between now and potentially October or November. And I'll use 2018 as an example. We kind of had a really big correction when the trade disputes were announced. We kind of had a big correction that took a while. It was actually several months to the downside. Then it attempted to recover, then it dropped again, then it managed to recover a bit. But basically, we increased that volatility pretty much until 2019 and then started to really climb. So this is my expectation for the moment. It's reasonable, I think, to see the market attempt to recover and potentially bump its head up against a couple of these levels while the market is effectively recharging its batteries. But I don't expect it to be a quick recovery. I certainly expect this to last several months. And there may be shorter term opportunities, and I'm going to be looking at shorter term either moves to the downside or back to this. So for example, on a lot of these, if I find that price heads back up into the moving averages and these levels of local support and resistance, and then find a series of bearish rejection candles forming throughout the week, yes, I might then look at shorting the markets to the downside, and again, but not ridiculously. I'm always going to have a stop loss in place, and I'm always going to take profit as we go, because I know that the market is likely to bounce aggressively off these levels. And although this is a bit of a bullish reaction on this candle, it's not bullish enough that it's convinced me the market isn't going to just attempt to head lower again this week. Okay, so the market may actually want to come back down and test these levels officially and then decide what it wants to do. So throughout the week, yes, I expect continued volatility. I expect the market to attempt to both climb and also potentially test a little bit lower as I did last week. I don't think we're out of the woods yet at all. If anything, the numbers, as long as those coronavirus numbers continue and it starts to impact more and more of us as lockdowns increase in different countries, that we start to go home from work, that's going to create a bit more paranoia, it's going to create a bit more fear and panic, or at least more confusion and not knowing what's going on. And therefore, that's why I don't expect this to clear up until that aspect of things has, because that's going to impact companies. I mean, if you look at airlines, they're just tanking, of course, and travel, business as well. Think of all the different, how businesses are going to cope with their offices, everyone working from home. So there's a lot of, this is a new thing that's not really happened in modern history, and so we're going to have to see how that unfolds. So actually, based off that confusion, we could see it head lower, but I just wanted to add, especially when we look at that NASDAQ, and I know this video is slightly longer than the usual 3 or 4 minutes that I do, but I do think, again, worthwhile going straight to that annual example, looking at that. If you look at the NASDAQ, we're away from the moving averages towards 6,000 is not outside of the realm of possibility to the downside, only if this continues to be incredibly bearish. And that could be something that happens over months, not something that happens this week, but something that happens months. And then you look at the 6,000 level here on a quarterly basis. It's not that bad. I mean, it's not that far. It would be another couple of weeks drop and we could be there, and then going back to that monthly basis. So my question, initially, but again, I'm still more optimistic than pessimistic. I do expect the markets really to attempt to hold at these levels, and the only reason they would fail to do that is if fresh fear is introduced into the markets. And honestly, there's no evidence to indicate right now that the Trump administration has a clue about what it's doing, and therefore the likelihood of fresh fear being introduced to the markets is actually high. If it was Obama, for example, yes, then I'm pretty much sure it would be handled, and in fact the reaction would have been bad, but not as bad. Really, if there's no indication that the US markets know that they have no plan going forwards, and the numbers continue to get worse, then the market will react in line with that and therefore head lower. So yes, it is not inconceivable that we could find this testing the 6,000 level, but it never carries on forever. It can't do that. But it's also interesting, worthwhile. I wrote a long article on where the market this is the period of kind of Obama's administration, 2 terms, of course, and this is the presidential election. This is where Trump came into the market and had a bit of a run, but otherwise it's been incredibly volatile, of course. Starting off 2018 with trade disputes, and starting off 2020 as well with just an assassination attempt, perhaps potentially starting a war. Now we've got this, so we've got a lot of uncertainty and volatility in the markets, and therefore it's worthwhile to err on the side of caution and just be prepared for things to get worse before they get better. The other thing I was just going to add in here, so looking at all of these markets, they're all effectively in the same situation. And basically, yes, in the shorter term this week, I'm going to be looking for shorter term opportunities to the downside. However, they're very cautious. By Friday, should the markets manage to have recovered substantially, then it might be that the market is going to start to climb higher next week. And therefore, this is not a situation, this is a situation where if I do short the market, it's with the understanding that the market will bounce at key levels. But just highlighting here, for example, the Euro stocks, just such a significant drop, historical, it's just huge. And therefore, it doesn't mean the market won't recover from that. It was a big drop, and sure, it's fear driven, and social media has added to that frenzy. But it also, the markets can find a base, and they usually will. So really this week, the volatility I expected to continue. Potentially social media to kind of make it a little bit worse. I think any indication of a lack of a plan from the US is going to cause further tremors. I do think there are buy orders sitting at these levels, and therefore if the week is ultimately optimistic, I think it'll finish higher as a result of that. So if I am shorting the markets, it'll be very much cautious, taking profit as I go ahead of these key levels, and at the same time, it wouldn't completely shock me if we ended up with a bit of a bullish candle next week. So basically, I have to be prepared for both outcomes, because right now, technically, all the longer term uptrends are now effectively broken. We've broken key lows, and therefore that uptrend is very much now broken, which means I now have to wait to see what the market is effectively going to do. But yes, the way that it is at this point in time is it could be the potential that we could see this carry on for some time, for many, many months, and the markets will climb and drop during those months. So the question now is going to be this week, what am I expecting? I'm still expecting big swings, but we had a really big recovery towards the end of last week. I'm looking for bearish candles to form at these key levels, and then potentially shorter term shorting opportunities with caution, of course. Otherwise, I will just sit outside of this, because these big swings are incredibly dangerous as well.